Subscribe to LearnCab and hit the bell icon to get notified.
Hello friends, welcome to the amendment lecture on GST for CA Final for November 2022 examinations. Friends, the amendments from 1st of November 2021 till 30th of April 2022. The amendment in Act, the amendment in Rules, the amendment in Notification, the amendment through various circulars which have been issued. All of them have been discussed over here. Friends, the duration of this amendment lectures is relatively very small as compared to previous attempts. It would hardly be around 2 hours or 2 hours 15 minutes. I hope you enjoy these amendment lectures. I wish you a very happy learning. As usual, before starting, for LearnCab students, I would recommend you to watch these lectures. Now friends, whatever lectures which you have already learnt from the LearnCab portal, with those lectures, you please supplement those lectures along with these amendment lectures. So you'll be saving a lot of time. So I do request you that whatever lectures which you've already watched, please do supplement those lectures along with these amendment lectures. The amendments are very few. So I request you, it is rather mandatory for LearnCab students to watch these amendments. Amendment notes are attached. You can please download them. Approach. As usual friends, we are going to discuss only about the change aspect. Of course, we'll be discussing the background, why this change is required and what is the implication after this change. So you're expected to know the basics to understand the change in a better manner. Now friends, those students who have been asking about the books, there are various books which are available at the description which is being provided over here. You have an SRK module which is your comprehensive text. It has been co-authored by me along with CA Vishal Jain. Then you have QR infographics, which is quick revision infographics, your revision material which is available. Then you have a question bank in the form of Train Your Brain. All of these hard copies and soft copies can be ordered for those who require at the description which is mentioned over here. Well, as usual, before we start, friends, LearnCab students, you have to mandatorily watch these lectures. All these provisions which we are going to discuss, you will not be finding them in these lectures which you are already watching them in the portal. For the reason that these amendments are very minimum, so therefore these are discussed as a separate lecture in itself. So friends, LearnCab students, whatever lectures which you have already studied from the portal, please do supplement those lectures with these amendment lectures. It is mandatory for you to study these amendment lectures. The amendments are very few, they are very simple. You will be easily in a position to understand them and master them. Amendment notes are attached. You can have a look at it. Approach, of course, I'm sure you by now you are already thorough with the basics. So the approach which we are going to have is we are going to discuss the change aspect. We are going to discuss what was the scenario prior to change, why the change was required, and what is the change which has come. Friends, if any of you all want to order the books, there are 3 types of books which are available. One is SRK, it is a comprehensive book on GST. Another one is QR infographics, it is a revisionary material. The third one is question bank. Now friends, please do read the description about these books before you place any order on the books. So the description, the link which is there is available over here for you to place an order. But however friends, against each product, what is the product about, what is the book about, the description has been mentioned against each of the product when you go inside the link. Please do watch and read the description carefully before you place an order. I wish you a very happy learning. The first amendment, friends, in the definition of supply. Friends, supply, as we know, there's actual supply, there's deemed supply. Once a transaction fits into the definition of supply, then we are going to see Schedule 2 would tell you whether it is a supply of goods or a supply of services. Similarly, we also have certain transactions which are neither a supply of goods nor a supply of services. So this is a broad outline of your definition of supply under section 7. You have actual supply, you have deemed supply. Once if it is supply, you could classify it further either as a supply of goods or a supply of services. And there are certain transactions which are neither a supply of goods nor a supply of services. Now friends, what is the change? The change is, it is a very extremely cautious amendment which the government has brought in. Now for this we need to understand a brief basic about service tax law. The issue is something like this. The Supreme Court has delivered a judgment under service tax law stating that service tax cannot be levied for the services which are rendered by a club to its members, for the reason that there is something called as principle of mutuality or doctrine of mutuality, which means that one person cannot make profit out of his own self. Say for example, I take 10 rupees from my one pocket and put it in another pocket. It cannot be called as my income. A person cannot make profit out of his own self. So similarly, unless it is specifically provided that it is going to be a deemed profit or a deemed supply, unless if it is specifically stated in general scenario, in the actual scenario, a person cannot make profit out of his own self. Now, considering the judgment of the Supreme Court, which stated that the services rendered by a club to its members would not be leviable to service tax for a reason that a person cannot supply services to his own self. Club is nothing but it is a collective pool of all the members. So, whatever contributions they make, it is for the common enjoyment of all the members. So, therefore, the services by a club to its members are not leviable to service tax because the court does not see two different persons. The club and the members, because of the doctrine of mutuality, are one and the same. Now, this judgment was delivered under service tax law. Be it as it may be, when it was delivered under service tax law, what implications does it have under GST? So, let us have a brief recap of what are the provisions under GST. If you could recollect the definition of business under section 2 clause 17, which stated that provision of any facilities by a club to its members, by an association to its members, is a business. It was included in the definition of business. Further going, if you could recollect schedule 2, wherein it was stated that where any unincorporated association is supplying goods to its members, is giving goods to its members, it would deem to be a supply of goods. So essentially the GST law also taxed the provision of any supply of goods or services by a club to its members. However, after this judgment under service tax law in the Calcutta Club's case, the government feared that the same interpretation, the same analogy would be extended even under GST, because what? GST is a replacement of service tax which was there. We had similar provisions in service tax. So fearing this, the government has brought in a retrospective amendment which is effective from 1st of July 2017. Now, what is that amendment? The amendment is nothing but the government wants to safeguard itself that the Supreme Court's judgment which is held that the services by a club to its members would not be taxed under service tax law. This analogy, this principle, this ratio should not be applied under the GST law as well. So, to safeguard that interest, the government has brought out this amendment. So, let's have a look. So, this was what we were discussing. Under schedule 2, we have para number 7, which states that supply of goods by an unincorporated association or a body of persons to a member for cash, deferred payment or valuable consideration shall be supply of goods. This was already there. So, now section 7, the amendment which is brought in. So, 7(1)(a), as we all know, it is actual supply, which means any of these transactions which is made for a consideration by a person in the course of furtherance of business shall be a supply. Now, what is the government fearing? And if you could recollect, under deemed supply, schedule 1, and friends, please understand, just because under schedule 2, if it is mentioned unincorporated association, if it is giving goods to its members, it would be a supply of goods. Just by mentioning that, it by itself will not be called as a supply, because as we all know, once a transaction should qualify to be called as a supply, either actual or deemed, and only then schedule 2 would come into place, whether that supply is a supply of goods or a supply of services. So friends, under 7(1)(a), it says all forms of supply which is made for a consideration in the course of furtherance of business. So here the government was trying to fit, the transactions of whenever there is a club which is collecting subscription from its members, it was taxed under 7(1)(a) as an actual supply, it is a transaction which is for a consideration. A club is charging a fees to its members, which is in the course of furtherance of the business of the club. Now, however, friends, after the verdict of the Supreme Court under the service tax law, If the same analogy is applied over here, how would the 7(1)(a) be interpreted? The 7(1)(a) would be interpreted that there is no consideration at all. Why is there no consideration? Because for consideration, there should be two different people. For a consideration, it is a consideration paid by one person to another person. I cannot pay consideration to my own self. Friends, please understand, a supply could be a deemed supply. Let's suppose there is a case of branch transfer. In the case of branch transfer, one branch is transferring goods to another branch. It is a deemed supply because of specific entry which is there in Schedule 1. If that specific entry was not there in Schedule 1, that branch transfer would not have been taxed under GST because there is no consideration which is involved. Assuming even if one branch is paying to another branch, it cannot be called as a consideration because one person cannot pay to his own self. So friends, now the government was fearing that the Supreme Court's verdict in the Calcutta Club's case, which stated that there is a doctrine of mutuality, there is a principle of mutuality. Here there are no two different persons involved. The club and the members are one and the same. That being the case, it is the whatever is the amount which is paid by the members to the club cannot be called as a consideration if the doctrine of mutuality, if that verdict of Supreme Court in the service tax era is again pulled in GST era as well. So friends, to safeguard this, fearing this interpretation not to be taken, the government has introduced an additional clause 7(1)(a). It states that the activities or transactions by a person other than an individual to its members or constituents or vice versa, which means supply either by a club to its members, that club of course should be non-individual, or either by member to a club or vice versa, for cash, deferred payment or other valuable consideration. This will also fit into the definition of supply. This has been specifically included. This clause has been specifically included. So 7(1)(a), the activities or transactions by a person other than an individual, by its members or constituents or vice versa, for cash, deferred payment or other valuable consideration. So what does it cover? So say for example, if there is a housing society, its members are the residents of the housing society. Is it a supply? The answer is yes. Any supply which is made by a non-individual to an individual is going to be a supply because of 7(1)(a). A club to the members of the club, also it is going to be a supply because was 7(1)(a). Friends, please understand, here there is nothing new which has been introduced. Already these transactions were taxable to supply. These are just safeguarded now by 7(1)(a) so that the Supreme Court's judgment in the service tax law is not extended in the GST era. So why was this done? There is an explanation which is introduced. Particularly for 7(1)(a), there is an explanation which is introduced which states that for the purposes of this clause, it is hereby clarified that notwithstanding anything contained in any other law for the time being in force, you can read this as service tax law, notwithstanding anything contained in service tax law or any judgment, you can say that the case of Calcutta Club's case, decree or order of any court, tribunal or authority, the person and its members or constituents shall be deemed to be two separate persons, and the supply of activities or transactions inter se shall be deemed to take place from one such person to another person. So friends, please understand, here there is a deeming fiction which is being introduced, but friends, please understand, this deeming fiction which we are talking about, states that the non-individual person, that is the club, and its members are deemed to be two different persons. Friends, please understand, here this is not an item which is introduced in Schedule 1. Why I am so specific? Because this is not an item which is introduced in Schedule 1, which means that by a member to a club has to be for a consideration. It has to be for a consideration, only then it would fit into 7(1)(a). I read this again for you. The activities or transactions by a person other than an individual to its members or constituents or vice versa for cash, deferred payment or other valuable consideration shall be a supply under 7(1)(a). So friends, consequently, this para number 7 of schedule 2, which covered only goods, that is supply of goods by an unincorporated association or body of person to its members for cash deferred payment or valuable consideration shall be a supply of goods. This has been omitted. This has been omitted because now the transaction is already come under 7(1)AA, where it states the activities or transactions. It is in fact covering goods as well as services by a person other than an individual to its members or constituents, but for a consideration, it would be a supply under 7(1)AA. Friends, what is the deeming fiction? The deeming fiction, it doesn't say that even without consideration it would be a supply. Friends, the deeming fiction is consideration has to be there. Then what is the deeming fiction introduced? The deeming fiction is the club and the members would deemed to be two separate persons, notwithstanding anything which is there in any judgment. I am sure you are able to follow this. So now friends, the updated definition of supply as it stands, you have actual supply 7(1)A and you have 7(1)AA. 7(1)AA does not bring anything new. It is only safeguarding the already transaction which was taxed under 7(1)A. It is only a safeguard measure under 7(1)AA. It is not bringing in anything new. And we have kept this under actual supply. We did not take this to deemed supply. We have kept this under actual supply because here this has to be for a consideration. What is the deeming fiction? The deeming fiction is only that the club and the members would be constituted, would be considered as two different persons. That is the only deeming fiction. Otherwise, it has to be for a consideration. So therefore, we have kept it under actual supply. Another thing is it is not bringing anything new. This was even otherwise already taxable under 7(1)A, only to safeguard this transaction not being taxed because of a judgment which was delivered under service tax law. This as an abundant caution, the government has introduced it as a specific clarification having retrospective effect from 1st of July 2017. Next, we have an amendment in the notification issued under 9 subsection 5. Friends, as we all know, under 9 subsection 5, if the notified services are supplied through an electronic commerce operator, the electronic commerce operator has to pay the GST, entire GST of the supplier. Now friends, what are the services which were notified? And of course, under 9 subsection 5, only services can be notified. Now what are the services which were notified? The services which were notified are, one was the passenger transportation service, the next one was accommodation services. Accommodation services only if the service provider, which means the hotel, was not liable to be registered. The third one was your housekeeping services, and again only if the supplier of services was not liable to be registered. In these cases, here the electronic commerce operator through whom the services were supplied was liable to pay the entire GST of the supplier. Now friends, there is a new addition to the list. The fourth services which has been notified is the restaurant services. If the restaurant services are supplied through an electronic commerce operator, the electronic commerce operator would be liable for paying the entire GST of the restaurant, which means otherwise which the restaurant was liable to pay the GST, this GST now would be discharged by the electronic commerce operator through whom these services are being supplied. Now, there is one exception to it. The exception is in case if that restaurant, in case if this restaurant happens to be, or in case if these services, these restaurant services which are being supplied through an eco, if these are supplied from a specified premises, if these are supplied from a specified premises, in such a case, 9 subsection 5 would not be applicable, which means that in such case, the electronic commerce operator need not pay GST. It would be the restaurant service provider himself who is going to pay the GST. Now, what is meant by a specified premise? Specified premise means any premises which is providing accommodation services. Please be careful. We are dealing with restaurant services wherein we are seeing the definition of specified premise. But what is the definition of specified premise? The definition of specified premise tells you where accommodation services which are being provided from that premise and which is having a declared tariff value, above rupees 7,500, that would become a specified premise. And from that specified premise, if restaurant services are being supplied, in such a case, the electronic commerce operator would not be paying the GST. It would be the restaurant himself who would be paying GST. We'll be seeing examples. First, we'll go to the provision. So this is the service which has been notified. It says supply of restaurant services other than the services supplied by a restaurant, eating joint, etc., which is located at specified premise. What is a specified premise? Specified premise means the premises which is providing hotel accommodation services, which is having a declared tariff of any unit of accommodation above 7,500 rupees per unit per day or equivalent. So friends, what it is trying to tell you, any restaurant service, general scenario, any restaurant service which is provided through an electronic commerce operator. Example, say for example, restaurant service is provided through Zomato. There's a restaurant, there's a small eating outlet which is supplying services through Zomato, which means it is receiving orders for food through Zomato and sending the food through Zomato delivery boy. So these are the restaurant services which are supplied through an electronic commerce operator. Who is going to pay the GST? The supplier of service is of course the restaurant service, the food service which we are talking about. The supplier of service is of course the restaurant. However, due to specific provision 9 subsection 5 along with this notification which is being issued, the GST would be paid by Zomato. For food services which are supplied by this restaurant, the GST on this supply of food services would be discharged by Zomato. Now, if this eating outlet or if this eatery which we are talking about, if it is located at a specified premise, let's suppose this restaurant which we are talking about is located in Taj Hotel. Now, does this Taj Hotel have a unit of accommodation whose tariff value, the declared tariff value is greater than 7,500 rupees? The answer is yes. Taj has a unit of accommodation which is a room whose declared tariff value is tariff, the value which is declared in the tariff. If you go to the website, they would be having a tariff value. That is the declared tariff value. Here, Taj Hotel has a declared tariff value greater than 7,500 rupees per unit per day, which means per room per day or equivalent. In such a case, this becomes a specified premises and this eatery, this restaurant is supplying services from the specified premises. In such a case, GST would be paid by the restaurant and not by the electronic commerce operator. It would not be paid by Zomato. So friends, let's take example. Restaurant services which is supplied through Zomato, service provider is a GST registered person. Repeat, scenario number 1, restaurant services is supplied through Zomato. The service provider, the restaurant is basically registered under GST. Does the scenario change? Friends, please understand, as regards as your accommodation services were concerned and as regards as your housekeeping services were concerned, there if the supplier was liable to be registered, then the supplier himself would be paying GST. It would not be the electronic commerce operator. But friends, here there is no such exception. For restaurant services which are supplied through ECO, even if the restaurant is registered, still ECO would be paying GST. The only exception is if the restaurant is located in specified premise, only in that case it would be the restaurant himself who would be paying GST. So friends, here even if the service provider is GST registered, it doesn't change the answer. So restaurant service which is provided through Zomato, service provider is GST registered person. Is it electronic commerce? The answer is yes. Is it supplied through ECO? The answer is yes, it is supplied through Zomato. Is it notified under 9 subsection 5? The answer is yes. Who is liable to pay tax? It is Zomato who is liable to pay taxes for the services which is supplied by this restaurant. Scenario number 2. Restaurant service is supplied through Zomato. Service provider is not registered under GST. Doesn't matter. Even if he is not registered under GST, still Zomato would be liable for paying GST. Is it electronic commerce? The answer is yes. Is it supplied through Zomato? The answer is yes. Is it notified under 9 subsection 5? The answer is yes. Who is going to pay GST? It is going to be Zomato. So friends, the supply was made by a restaurant who is not registered under GST. Still, its GST would be paid by Zomato. Scenario number 3. Restaurant services are supplied through Zomato from specified premises. Let's suppose this restaurant is located in Taj Hotel. Now, Taj Hotel has got a declared tariff of a unit of accommodation, per unit of accommodation greater than 7,500 rupees. This restaurant is now supplying food services through Zomato. So friends, is it electronic commerce? The answer is yes. Is it supplied through an eco? The answer is yes. Is it notified under 9 subsection 5? The answer is no, because now it is covered by the exception. Since these services are supplied or this restaurant is located in specified premise, here there is outside that particular notification. So who is going to pay? Liable to pay tax. It is not going to be Zomato. It is going to be the it is going to be the restaurant himself. Next one, restaurant services which is supplied through own website. Now friends, let's suppose this Taj Hotel which is having, a restaurant of its own, and it is accepting orders. It is accepting orders not through Zomato. It is accepting orders on its own website. Now friends, is it electronic commerce? The answer is yes. But is it supplied through an eco? The answer is no. It is not supplied through a third person electronic commerce operator. Here the supplies are self supplies which is made by its own website. So friends, here it is not supplied through an eco. Let it not be Taj Hotel, because there could be a confusion that Taj Hotel is having a declared tariff greater than 7,500 rupees. Let it be any other restaurant. Let it be any other restaurant which is located in a hotel, or which may not even be located in a hotel. A restaurant may not even be located in a hotel. It is an independent eatery. Now that particular restaurant is accepting orders on its own app, on its own website. It is not accepting orders through Zomato. So friends, in such a case, or let's suppose out of 100 orders, 80 have come through Zomato, 20 have fallen on their own website, 20 have come on their own platform, own mobile application. Now, as far as those 80 orders which were concerned, we are talking about an independent eatery, 80 orders which were concerned, which came through Zomato, for them the GST would be paid by Zomato. However, those 20 orders which came through its own app, for these 20 orders, they are not supplied through an electronic commerce operator. So therefore friends, here 9 subsection 5 is not applicable at all, because these services are not supplied through an eco. Please understand friends, under 9 subsection 5, the transaction would fit only if the services are supplied through an electronic commerce operator. So friends, here 9 subsection 5 is not applicable at all. Who is liable to pay GST? It is going to be the restaurant who is liable to pay GST. Friends, there is a small circular as regards as electronic commerce operator is concerned. Before we go into that circular, a brief recap of electronic commerce operator, liability to pay tax, and the registration aspect. Once we discuss this, I am sure you yourself will be able to answer what the circular is trying to answer. Electronic commerce, the definition is supply of goods or services including digital products over digital or electronic network, self-explanatory. Electronic commerce operator, any person who owns, operates or manages digital or electronic facility or platform for electronic commerce. So it is basically any person who is the owner or operator. Say for example, you have Swiggy, you have Zomato, you have Flipkart, you have Amazon. All these are electronic commerce operators. Now, who is liable to pay tax? Now friends, for own supply of goods and services. For own supply of goods and services, let's say for example, you have First Cry. First Cry, is it electronic commerce? The answer is yes. Now, in case of First Cry, it is supplying its own goods and services. It is not acting as an aggregator where third-party vendors are supplied through First Cry. Or let's suppose you have Titan. Now, Titan watches are sold through own website of Titan. Now, here the website of Titan is not acting as a platform wherein other suppliers are supplying watches through this platform. So friends, in case of own supply of goods and services, who is liable to pay taxes? It is the supplier himself, Titan in that case, or First Cry in that case. They are liable to pay taxes of the supply which we are talking about. Next one, if it is aggregator model, which means that there is a platform, there are third party suppliers or there are other vendors who are registered on this platform, who are listed on this platform, and they are supplying goods or services through this platform. So in case of an aggregator model, if notified services, the services which are notified under 9 subsection 5, if they are supplied through this platform, who pays the GST? The entire GST would be paid by electronic commerce operator. It would be paid by that platform. See, for example, you have restaurant services, the latest which has been added to the list. So it is notified under 9 subsection 5. So in such a case, it would be Swiggy or Zomato who is liable to pay GST of that particular restaurant. Next one, in case of non-notified services or in case of goods, if the consideration is routed through ECO, the supplier would pay the GST. However, ECO would deduct something called as TCS under GST, and he would deposit it with the government. However, if the consideration is not routed through ECO, in such a case, TCS of course is not applicable. Supplier would as usual pay the tax for the supply which is being made. I'm sure this we already know it. There's no amendment which is over here. We're just having a recap of the liability to pay tax possibilities in electronic commerce scenario. Next one, liability for registration. Now friends, as far as registration is concerned, here in case where own goods or services are being supplied, there's no aggregation. It is not acting as a platform where other vendors are supplied through it. So in case of an own platform, in case of own goods or services which are being supplied, registration is subject to threshold, which means you will get that basic threshold limit. In case of an aggregator model, now in case of an aggregator model, one, there is an ECO himself, there is an aggregator himself. You have Flipkart, you have Amazon, you have, let's suppose Swiggy, you have Zomato. Now these are all aggregator model. In aggregator model, for the aggregator himself, which means we are talking about Flipkart, we are talking about Amazon, we are talking about Swiggy, we are talking about Zomato. We are not talking about the vendors who are supplying through them, we are talking about the platforms themselves. So platform themselves, for them it is mandatory registration, because either they would be liable for paying taxes under 9 subsection 5 or under section 52 TCS would be deducted. If either of these things are going to happen, they are liable for mandatory registration under section 24. Next one, for suppliers who are supplying through ECO, for the vendors who are supplying through ECO, if it is notified under 9 subsection 5, for these supplies, the entire taxation is going to be paid by electronic commerce operator. So there's no point in asking them to get registered. So therefore, it is no registration irrespective of threshold. However, we are only concerned about these particular services. Say for example, there's a supplier who's having his turnover, let's say 80 lakhs. All his turnovers are notified under 9 subsection 5 and the supplies are made through an ECO, consideration routed through ECO. Irrespective of turnover, this particular supplier need not get registered. However, if he is having some other turnover which is not making through 9 subsection 5, then you have to check whether the aggregate turnover has exceeded the threshold. For other supplies, if it is services, for the vendor, it is registration subject to threshold. If the goods are supplied through an ECO, it is compulsory registration under section 24. Here also we have not seen anything new. Now friends, the clarifications which have come, most of the concepts you already know them. Let's have a look at the question. Should ECO get separately registered for paying TCS? Now friends, let's take the example of Flipkart. Now Flipkart, please understand what are the responsibility under GST over Flipkart. One, what is Flipkart working for? Of course, it is not a charitable organization. It works for commission. So the commission which Flipkart is receiving, it is a supply of service made by Flipkart to the vendors. What is the service which Flipkart has supplied? It has created a platform where the vendors can list the goods over there. So Flipkart is allowing the vendors to use its platform. So therefore, it is a supply of service which Flipkart is rendering to its users. So now friends, those services which Flipkart is rendering, the services of Flipkart's own, is it liable to pay GST? The answer is yes. Here it is straight away a case of forward charge mechanism. So therefore, Flipkart would be taking registration. Agreed. Now goods are supplied through Flipkart. For these goods which are supplied through Flipkart, Flipkart has to deduct TCS. Now, for deducting this TCS and remitting it to the government, should Flipkart take a separate registration in the capacity of a tax collector? The answer is yes. So now friends, should ECO get separately registered for paying TCS? The answer is yes. If the ECO is already registered as a taxpayer, in addition to it, it is also having the responsibility of deducting TCS under GST and paying it to the government. It has to separately get itself registered as a tax collector. Next one. Should ECO get separately registered for paying taxes under 9 subsection 5? Now friends, let's take an example. Let's take the case of Swiggy. Now friends, what is Swiggy functioning for? Of course, the basic objective, the prime objective of Swiggy is to earn a commission. It earns commission income. So now friends, that commission which Swiggy is earning, is it liable to pay GST on it? The answer is yes. Would it be registered for the purpose of paying that GST on the commission for the service it is rendering to restaurants? What service is Swiggy rendering to restaurants? It is allowing restaurants to use the platform of Swiggy, for which it charges a commission on the food which is being served or the food which is being sold through Swiggy. So friends, for paying GST on that commission received, or it might be charging platform charges, platform usage charges it may be charging. For that income, for that supply which is made by Swiggy, would it get registered under GST? The answer is yes. Now the next question comes is, Swiggy should also pay GST of the restaurant services which is supplied by the restaurant but which is supplied through Swiggy. It is notified under 9 subsection 5. So now friends, Swiggy has to pay taxes in two capacities. One, in the capacity of a taxpayer. Two, in the capacity of paying taxes of the restaurant under 9 subsection 5. Now the question is, in the capacity of a taxpayer, it is already registered. Should it get separately registered for paying taxes under 9 subsection 5 of the restaurant? The answer is no. The answer is no, because friends, if you could recollect section 24, tax deductor separate registration was required, mandatory registration, tax collector separate registration, mandatory registration, input service distributor you had separate registration and a mandatory registration, but there was no registration separately required for paying taxes under 9 subsection 5. If you are already registered, you are otherwise paying taxes on the commission income which you are receiving, or on the platform usage charges which you are receiving, or on the supplies which you are making. If you are otherwise registered, you need not take a separate registration for paying taxes under 9 subsection 5. Friends, please try to differentiate this point. If you are otherwise registered for paying GST under forward charge mechanism for your supplies, and point number 1, if you are also responsible for paying TCS to the government or TDS to the government, then you have to get separately registered. However, if you are additionally responsible for discharging 9 subsection 5 taxes, since you are already registered, the very same registration number would do. You need not get separately registered for discharging these taxes of 9 subsection 5. So friends, now, should ECO get separately registered for paying 9 subsection 5 taxes? The answer is no. Should ECO pay 9 subsection 5 taxes even if the supplier is unregistered? Now friends, this would depend on the nature of services which is being supplied. Through ECO, if passenger transportation service is being supplied, whether the supply is registered, unregistered, ECO would pay taxes. That is, your Ola would pay taxes. But however, through ECO, if accommodation services are being supplied, and if the supplier is registered, here the hotel himself, the lodging hotel himself would be paying GST. So the third situation, housekeeping services are being supplied. Let's suppose it is being supplied through urban company. If the supplier is registered, then the supplier would be paying GST and not the urban company. The fourth category is restaurant services which is being supplied through ECO. Whether the restaurant is registered or unregistered, ECO, your Swiggy or Zomato is liable to pay GST for these restaurant services which are supplied through Swiggy or Zomato. So friends, out of the 4 categories which are being notified, accommodation and housekeeping services, if the supplier is registered, ECO would not pay GST, the supplier himself would pay GST. Passenger transportation services and restaurant services, whether supplier is registered or unregistered, ECO would be paying GST of the supplier. So friends, here it is yes as well as no. Whose aggregate turnover would it be considered to be? You have passenger transportation service, the taxi driver. You have accommodation services, the hotel, the lodging hotel owner. You have housekeeping services, the person who's supplying housekeeping services, and you have restaurant services. Now for these services which are being supplied through ECO is going to pay taxes, but the question is whose turnover this is going to be considered to. Friends, please understand here, these are the persons who have actually supplied, who have actually made the supply of services. It is only a matter of administrative convenience that the government wants to collect the taxes from some other person but not the supplier. But that doesn't mean that this would become the turnover of some other person. It would still remain the turnover of these particular suppliers only. So friends, now whose turnover would that be considered to be? These would still be considered to be as the turnover of suppliers and not of the electronic commerce operator. Next one, the reason why is this crucial? Friends, this is crucial because let's suppose there is a restaurant. Now there is a restaurant who is making supplies through ECO. Let's assume the entire supplies of this particular restaurant is supplied through ECO only. It is making supplies either through Swiggy or through Zomato. Now friends, its turnover is, let's say, 60 lakh rupees. Is it liable for registration under GST? The answer is no, because the reason is for this entire 60 lakh rupees, Swiggy or Zomato is going to pay GST under 9 subsection 5. There is no requirement for them to get registered. However, in addition to the 60 lakh rupees, some additional 1 lakh rupees there is a turnover. This 1 lakh turnover is not made through this electronic commerce operator. It is a direct supply which is made by this restaurant. Now friends, is this restaurant liable to be registered? The answer is yes. Why? Because that 60 lakh rupees, whose turnover it was? It was still the turnover of this restaurant and not of Swiggy or Zomato. So 60 lakh rupees, this turnover. If it is exclusively making only these supplies through Swiggy or Zomato, no requirement to get registration. However, additional 1 lakh comes. Now your aggregate turnover becomes 61 lakh rupees and not merely 1 lakh rupees. So therefore, since its aggregate turnover is 61 lakh rupees, it is liable to be registered and it would be paying GST for the turnover of 1 lakh rupees which is being made directly. For the rest of the 60 lakhs, the GST would be paid by either Swiggy or Zomato. Next one. So we came to a conclusion that these particular supplies which are being made through ECO, the turnover is still of the supplier. It is not of the electronic commerce operator. So there's a user, there's an electronic commerce platform, there is a restaurant. User orders food through this electronic commerce operator. Through this electronic commerce operator, food is being offered. This restaurant is delivering food through this electronic commerce operator through this particular user. Now friends, whose turnover is this? This is the turnover of restaurant. Agreed. The question is, this is the turnover, outward supply turnover of the restaurant. The next question comes, this outward supply turnover of restaurant, can it be regarded as an inward supply of this ECO? The answer is naturally no, because whose inward supply is this? This inward supply is actually of this user. It is of the person who has booked these services. ECO is only a platform, it is only a facilitator. This turnover is neither the outward supply of this ECO nor the inward supply of this ECO. So friends, supplies where ECO is paying taxes under 9 subsection 5, is it an inward supply of ECO? The answer is no, it is not an inward supply of the ECO. Next one, if yes, since it is no, so therefore the next question doesn't come at all. However, if yes, can ECO take credit of this? Friends, since it is not an inward supply of this ECO, there is no further question in thinking whether ECO can take credit of these or not, whether these credits are blocked or not. So the next question becomes not applicable at all. These are not the inward supplies of ECO. The next one, at what rate should ECO discharge taxes under 9 subsection 5? Restaurant services are supplied through Swiggy. Now, please understand from Swiggy's point of view, Swiggy has to pay GST in two capacities. One, it would be receiving commission from the restaurant. That is an outward supply of Swiggy to the restaurant. For that outward supply, it would be paying GST. Yes, what are these services? These services could be business support services. Fine. So for these services, what is the rate of GST? It is 18%. Now, Swiggy also has to pay GST in the capacity of an electronic commerce operator where restaurant services are supplied through it. It has to pay GST on the food service, food which is supplying to it, which is supplied through it. what is the rate of GST? Is it going to be the same 18%? The answer is no. Here, the rate of GST is going to be the rate applicable on the services which are supplied through it. If restaurant services are supplied through it, the rate of restaurant services, accommodation services supplied through it, the rate of accommodation services, housekeeping services supplied through it, the rate of housekeeping services, passenger transportation services supplied through it, the rate of passenger transportation services. So friends, at what rate should ECO discharge 9 subsection 5 taxes? It is at the applicable rates of these particular services which are supplied through it. Who shall raise invoice for 9 subsection 5 supplies made through ECO? Now friends, please understand, as far as invoicing is concerned, here ECO would be, the circular says, ECO would be the person who is responsible for raising invoices for the supplies which are made through 9 subsection 5. The circular is addressing as a matter of administrative convenience that these invoices for the supplies which are made through ECO, where the taxes are liable to be paid by this particular ECO, invoices would be generated by the ECO. Say for example, there is a restaurant, the Swiggy, restaurant supplying services through Swiggy. Now for these food related services which is supplied by this restaurant, who is going to pay the taxes? Swiggy is going to pay the taxes. Who is going to raise invoices for these services which are supplied through Swiggy? Swiggy is going to raise invoice. So friends, who is going to raise invoices for 9 subsection 5 supplies made through ECO? It is going to be the electronic commerce operator is going to raise an invoice. Next one, who shall raise invoice for other than 9 subsection 5 supplies made through ECO? You have a vendor who is supplying goods through Amazon. Now, who is liable to pay GST? Here, goods cannot be notified under 9 subsection 5. So, therefore, this vendor who is supplying through this Amazon is liable to pay GST on it. However, should Amazon deduct something called as TCS? The answer is yes. Now, friends, we have supplies made through ECO, not notified under 9 subsection 5. Who raises an invoice? Here, the supplier himself raises the invoice. So, friends, here, in the earlier question, it was ECO would raise an invoice in case of 9-5 supplies. In case of non-9-5 supplies, it would be the supplier himself who is going to raise the invoice. As far as Aadhaar authentication is concerned, we have already seen this whenever a person is applying for registration, Aadhaar authentication was mandatory. However, friends, if a person did not possess an Aadhaar number, or he did possess an Aadhaar number but Aadhaar authentication failed due to some reasons, then in such a case, alternative and viable means were offered to him, which means the physical inspection was being done and only thereafter the registration was being granted. So friends, in a way, when a new registration is being applied, there, even if you did not carry out the Aadhaar authentication, there were some alternative and viable means which were given to you and then registration was granted to you even if you do not possess an Aadhaar number. But however, friends, there is a new rule which is being introduced, Rule 10B, which states that for these listed activities, Aadhaar authentication is mandatory. You might have got a registration number even without authenticating your Aadhaar. But if any of these 3 activities are supposed to be carried out, Aadhaar authentication is mandatory. Now, what are these activities? Friends, these activities are where application for revocation of cancellation of registration is being filed. Friends, as we know, cancellation of registration, either the department can initiate it or the registered person himself may make an application for cancellation of registration. When the department initiates the cancellation of registration, this registered person can apply for a revocation of cancellation, which means he wants this registration to be active again. So, in a case where a person wants to make an application for revocation of cancellation, Aadhaar authentication is mandatory. The next one, for filing a refund application in form RFD01 under Rule 89 or a refund application under Rule 96 of IGST which is paid on goods exported out of India. Friends, in simple terms, if you want to make any application for refund, Aadhaar authentication is mandatory. Now friends, what if a person doesn't possess an Aadhaar number? Will he not be able to carry out these activities? Here friends, there is a proviso which is being inserted. But friends, please understand this proviso, this exception which is there, we have to watch it carefully. It doesn't tell you if you do not have an Aadhaar number, no problem, don't authenticate your Aadhaar, we will we'll give you some other alternative and viable means. Here an alternative means is being given, but let's have a look at the alternative means. What does it tell? It tells, provided that if Aadhaar number has not been assigned to a person required to undergo the authentication of Aadhaar, then such person shall furnish the following identification documents, namely Aadhaar enrollment ID slip and any of these following documents. Which means what? If you want to carry out any of these activities which is there in 10 capital B, rule 10B, you have to authenticate your Aadhaar. If you do not have an Aadhaar number, first go and apply for Aadhaar number. You will be getting an enrollment ID slip. You have to furnish that enrollment ID slip. Here, if you do not have an Aadhaar number, alternative and viable means is not bypassing the Aadhaar itself. If you do not have an Aadhaar number, you want to do any of these activities of rule 10B, first go apply an Aadhaar, get an Aadhaar enrollment ID slip. Along with that ID slip, in the common portal, you submit these documents, which is the bank passbook with photograph or voter ID or passport or driving license. Any of these documents you submitted. Then you will be receiving an Aadhaar number. Once you receive the Aadhaar number, within a period of 30 days, you have to get your Aadhaar authenticated. So this is the alternative means which is given. This alternative means is not bypassing the Aadhaar. Here, you have to make an application for Aadhaar, get the enrollment slip, submit these documents. Thereafter, once Aadhaar number is being allotted to you, within a period of 30 days, you have to get your Aadhaar authenticated. So friends, in simple terms, what it is trying to tell you, rule 10B, you might have taken registration even without having an Aadhaar number by alternative and viable means through those physical verification process which we have seen in the registration. However, if you want to carry out any of these activities of rule 10B, you have to get your Aadhaar authenticated. If you do not have an Aadhaar, what you have to do? Go make an application for Aadhaar, get the enrollment ID, submit any of these documents, give it to the common portal. Then once these things are done, which means you gave your Aadhaar enrollment ID, you gave these documents, once these things are done, you will be able to carry out these activities of rule 10B. Then once you receive the Aadhaar number, within a period of 30 days, you have to undergo authentication of Aadhaar. Now friends, whose Aadhaar needs to be authenticated? Here it tells, in case of a proprietorship firm, it is proprietor. In case of a partnership firm, partner, HUF, Karta. In case of a company, whole-time director, managing director. In case of an association of person, body of individual, society, the members of the managing committee. In case of a trust, the trustees who are there in the board of trustees. And along with all of them, and the authorized signatory has to carry out the Aadhaar authentication. Say for example, in case of a partnership firm, whose Aadhaar needs to be authenticated? It is partner and the authorized signatory. In case of a proprietorship firm, proprietor and the authorized signatory. In case of an HUF, Karta and the authorized signatory. In case of a company, it is MD or whole-time director and the authorized signatory. These persons' Aadhaar authentication needs to be done. Only then the activities which are mentioned in rule 10B could be carried out. If you do not have an Aadhaar number, go apply for it. Out of those 4 documents, any one document, these 2 things you upload it in the portal, you can carry out those activities. However, once you receive the Aadhaar number, within a period of 30 days, carry out the Aadhaar authentication. The next change is in composition scheme. Now friends, as we all know, a manufacturer of notified goods is not in a position to opt for composition scheme. Neither the composition scheme of section 10(1) and 10(2) nor the special composition scheme of 10 subsection 2A. Now friends, what are those notified goods? Those notified goods so far were ice cream and other edible ice whether or not containing cocoa, pan masala, tobacco and manufactured tobacco substitutes and aerated water. Now friends, this list has been extended. There are few more goods which have been added. A manufacturer of these notified goods also cannot opt for the composition scheme. So these are fly ash bricks, fly ash aggregators and fly ash blocks, bricks of fossil meals or similar siliceous earths, building bricks, earthen or roofing tiles. So friends, a manufacturer of these goods also is not in a position to opt for composition scheme. Now friends, another point to remember is, you remember the special threshold of 40 lakhs which is available, fine. So in those cases, the person who is wanting to opt for this special threshold of that 40 lakh rupees, he should not be a supplier of notified goods. He shouldn't be a supplier of notified goods. Even that list is extended and these items are added. So friends, fly ash bricks, aggregator blocks, till earthen or roofing tiles. A manufacturer of these goods cannot opt for composition scheme. A supplier of these goods cannot opt for the special threshold of 40 lakhs. So this list has been extended in both these places, composition scheme as well as the special threshold of 40 lakh rupees. The next change in input tax credit. Friends, as we all know, input tax credit can be taken only if certain conditions are being satisfied. What are those conditions? The conditions broadly were that you should be in receipt of document, be it tax invoice or debit note or the invoice of input service distributor. You should have received the goods and services. Then your supplier should have paid the taxes to the government either using his admissible credit or through cash. Now friends, wait a moment. The third condition, that the supplier should have paid the taxes. How is the recipient going to know whether the supplier has paid the taxes or not? Of course, the portal should intimate him that against each invoice where the recipient wants to take the credit, whether the supplier has paid the taxes to the government or not, and only then the recipient would be able to ensure that he should be taking the credit or not. Now friends, when the portal has failed to inform the recipient that whether the supplier has paid the taxes or not, there is no ways and means which is available with the recipient wherein he can ensure whether he has satisfied the condition of input tax credit or not. So friends, in a case where the recipient is not able to know because the portal is incapable to inform him whether against each invoice the supplier has paid the taxes or not, this particular condition, payment of tax by the supplier, is practically not being followed. Now friends, since this is practically not being followed because of the inefficiency of the portal to inform the recipient whether the supplier has paid the taxes or not, they had diluted this condition by introduction of a rule called as Rule 36 Sub Rule 4. We are discussing the background of the amendment. They had introduced 36 Sub Rule 4 by diluting this condition. What is this condition saying? That the supplier should have paid the taxes. Now what they have diluted it in 36 Sub Rule 4, they say that the supplier should have filed his GSTR 1 or the details of those invoices, the invoices based on which the recipient wants to take the credit, the supplier should have uploaded, should have filed these details of outward supplies in his statement of outward supplies in his GSTR 1. He should have filed it and it should have been appeared in GSTR 2A of the recipient. This was the Rule 36 Sub Rule 4 which stated so. Now friends, broadly, section says supplier should have paid the taxes. Practically not being followed, rule being introduced diluted the provision of section stating that supplier should have filed his GSTR 1. Now friends, please understand, supplier by filing his GSTR 1, it cannot be ensured whether he has paid the taxes or not. The supplier might have filed GSTR 1 but not filed 3B, or filed 3B also but did not include this particular invoice in his 3B. So therefore, just by filing GSTR 1 appearing in GSTR 2A, it cannot be said that the supplier has paid the taxes. So 36 Sub Rule 4 has diluted this condition. Now what is the problem? The problem is 36 Sub Rule 4 was challenged in the courts. It was challenged in the court stating that section 16 doesn't stipulate any condition that the supplier should file his GSTR 1, only then the recipient can take the credit. Section 16 tells the supplier should pay the taxes. There is no such condition that the supplier should file his GSTR 1, only then the recipient can take the credit. Section 16 doesn't say so. When section 16 doesn't say so, how can a rule say so? Because friends, as we have all learned, rule cannot override the provisions of Act. Act tells supplier should pay the taxes. Rule tells supplier should file GSTR 1. Is there any such condition in Act which tells that supplier should file GSTR 1, only then the recipient can take the credit? No. Section says supplier should pay the taxes. Let the portal be efficient. Let the portal tell whether the supplier has paid the taxes or not. I will comply with the section then. Until then, just because a rule is telling and section doesn't tell, I will not follow the rule. This was the challenge which was made before the courts. So therefore, what was the issue before the government? The issue before the government was, there was a provision which stated that ITC can be taken only if it is appearing in GSTR 2A or 2B as the case may be. But it was this particular provision, this particular rule was not backed by the Act. The Act did not contain any such provision. So therefore, this amendment, now there is an amendment in the Act itself which states that only if the supplier would file his GSTR 1 and it would appear, it would be communicated to the recipient, only then the recipient can take the credit. So what is being done by this amendment? 36 sub rule 4 has now got a statutory backing. Let's have a look at 16(2)AA, a new clause which has been inserted. The details of the invoices or the debit note which is referred to in clause A. What was clause A? 16(2)A, the first condition, invoice, the document should have been available with the recipient for him to take the credit. So the recipient should receive the invoice. So that invoice, the recipient should receive it. That invoice should be uploaded by the supplier in his 1. It should be communicated to the recipient in his 2A. Only then credit can be taken. 16(2)AA. Let's have a look. The details of the invoice or the debit note which is referred to in clause A has been furnished by the supplier in the statement of outward supplies, and such details have been communicated to the recipient. Only then this credit can be taken. So now friends, 36 sub rule 4. Friends, if you could recollect, credit can be taken to the extent of, prior to amendment, to the extent of 105% of eligible credits which is appearing in GSTR 2B. Now that 105% has been gone, it is now 100%. That extra cushion of 5% which was available is now no longer available. Why no longer available? Because now this 36 sub rule 4 is under which provision? It is under the statutory backing of 16(2)AA. 16(2)AA doesn't give any leverage of 5% or extra 10%. No extra leverage which is being given. It simply tells you credit can be taken only if the supplier is filing the details of his outward supplies and communicated to the recipient. No extra leverage given. So friends, what is the amendment? Amendment is 36 sub rule 4 is being given a statutory backing. 16(2)AA, nothing new. As far as the conclusion is concerned, it is nothing new. Earlier the provision was there in 36 sub rule 4. It was there in rule, now it is there in Act. No new provision has been introduced. Only statutory backing has been given. But what is the change? The change is, earlier it was 105% of eligible credits appearing in 2B. Now it is 100%. Means nothing extra would be available. So friends, no input tax credit shall be availed by a registered person in respect of invoice or debit notes, the details of which are required to be furnished under 37 subsection 1, unless the details of such invoices or debit notes have been furnished by the supplier in his GSTR 1 or using the invoice furnishing facility, and the details of such invoices or debit notes have been communicated to the registered person in form GSTR 2B. This debate of whether it is GSTR 2A or 2B is also closed. Only if the supplier is filing his details of outward supplies and including that particular invoice based on which the recipient wants to take the credit, only if the supplier is filing his details of outward supplies by the due date, only then the recipient would be in a position to take the credit for that particular month. If he is filing later, credit is not disallowed to you. You cannot take it in that month. You also take it in next month. This is the provision which has been introduced. So friends, let's take an example. For October 2022, 100 invoices the recipient is having, total ITC amount is 10 lakhs. Now the details which are further given, 80 invoices involving ITC of rupees 6 lakhs is filed by the respective suppliers by 10th of November. Filed within due date? Yes. When can the credit be taken? It can be taken while filing the GSTR 3B for the month of October. When he is going to file it, let's suppose by 20th of November, for the month of October, this credit of 6 lakhs can be taken because details has been uploaded by the suppliers in their GSTR 1 and uploaded by the due date appearing in GSTR 2B also. 15 invoices involving ITC of rupees 1 lakh is by 15th of November, which means it is filed after the due date. For the month of October, filed on 15th of November after the due date. credit cannot be taken for the month of October, because this will not appear in GSTR 2B of October. This would appear in GSTR 2B of November. So credit can be taken of this 1 lakh rupees only in the month of November month GSTR 3B. 5 invoices involving ITC of 3 lakh is not filed at all. Credit cannot be taken at all. As and when, if at all, it is filed in future, but before the last date for availment of input tax credit, as and when it is being filed, credit can be taken. So this is 16(2)AA read along with 36 sub rule 4. Friends, as far as the provision is concerned, conclusively there is no change at all. One which was there in rule has been brought into act. What are the points to be mentioned? Earlier it was 105% of eligible credits appearing in GSTR 2B. Now it is 100%. The next thing is whether it is 2A or 2B. Rule clearly now sets out it is GSTR 2B. Only the supplier is filing by due date. The recipient would be in a position to take the credit for that particular tax period. The next amendment is in e-invoicing. Now friends, the limit was any registered person whose aggregate turnover in any preceding financial year from 17-18 onwards, if it crossed 50 crore rupees, e-invoicing was mandatory. Now friends, that 50 crore rupees has been amended and now it stands at 20 crore rupees. So friends, any registered person whose aggregate turnover in any preceding financial year from 17-18 onwards, if it has exceeded 20 crore rupees, e-invoicing provisions are applicable for that particular person, which means that for any B2B supplies or exports which are being made by that particular registered person, he has to raise an invoice only after generating an IRN number from the e-invoicing portal. The next concept in Rule 86A. Friends, as far as Rule 86A is concerned, if the proper officer has got reasons to believe that input tax credit has been taken fraudulently or ineligible input tax credit has been taken, then the proper officer can block the input tax credit from being utilized. That means once is going to block this credit in the electronic credit ledger, that particular credit cannot be utilized, nor a refund of that particular credit can be taken. Now friends, the question is, who is that particular proper officer who can block this credit? So friends, these particular officers have been decided according to the quantum of the issue. If the total amount of ineligible ITC or fraudulent ITC, if it is not exceeding rupees 1 crore, which means if it is up to rupees 1 crore, then it is going to be Deputy Commissioner or the Assistant Commissioner. This is in the administrative wing. In case of investigative wing, the rank remains the same, only the nomenclature changes. It is the Deputy Director or the Assistant Director. If it is above 1 crore but not exceeding rupees 5 crore, it is going to be Additional Commissioner or Joint Commissioner, Investigative Wing, Additional Director or Joint Director. If it is above rupees 5 crore, it is going to be Principal Commissioner or Commissioner. Here it is going to be Principal Additional Director General of DGGI or Additional Director General. So friends, these are the slabs, these are the quantums, and based on the quantum, these are the designated officers who can block the input tax credit under rule number 86A. The next change, friends, in return filing. Now friends, GST is a compliance based law. The government is focusing more and more on compliance. The government is designing the law in such a manner that a registered person is forced to comply with the law, is forced to file his returns, and is forced to file his returns on time. Let's take an example, friends. If I am a supplier, I do not file my GSTR 1 within the due date, it would not auto-populate in your GSTR 2B, assuming you are my recipient. It would not auto-populate in your GSTR 2B. You cannot take credit for this particular month. Therefore, I am going to lose business. So, you are going to follow me up. You are going to be constantly behind me to ensure that I file my GSTR 1 by due date. Agreed. I file my GSTR 1 by due date, you get the credit. But the government doesn't get the taxes, because taxes do not go through GSTR 1. Taxes go through GSTR 3B. So what is the benefit which the government is getting out of it? Now friends, recipient wants an entry in 2B, for which I have to file GSTR 1. The government wants taxes through GSTR 3B. So now the government creates a trap wherein it says, if I want to file my GSTR 1, I should have filed my GSTR 3B of the preceding months. Without filing GSTR 3B of the preceding months, if I have not filed my GSTR 3B for the preceding tax period, I cannot file GSTR 1 for the current tax period, which means my recipient cannot take credit. So friends, I cannot have any return which is pending, because if my 3B of the preceding tax period is pending, I cannot file my 1 for the current period. If I cannot file 1 for the current period, you cannot get the credit. If you cannot get the credit, I do not get the business. So indirect pressure is being created. So friends, what is the amendment? The amendment is, a registered person could either be under QRMP scheme or he could be under the regular scheme. If a registered person is under the regular scheme, here it says, prior to the amendment, if I have not filed GSTR 3B for the preceding 2 tax periods, I will not be able to file my GSTR 1 for the current tax period. This is prior to the amendment. Post amendment, if I have not filed my GSTR 3B for preceding 1 tax period, I would not be in a position to file my GSTR 1. So friends, the change is only in the regular scheme. For QRMP scheme, earlier it was if I did not file my GSTR 3B for 1 preceding tax period, which was 1 quarter, I would not be in a position to file either GSTR 1 or IFF. That remains the same. The only change is, as far as regular persons was concerned, generally it was preceding 2 tax periods. If rule 86B was applicable, it is 1 tax period. Now friends, anyone it is, if I am under regular scheme, if I have not filed my GSTR 3B for preceding 1 tax period, I cannot file my GSTR 1 for the current tax period. Let's have a look. Notwithstanding anything contained in this rule, a registered person shall not be allowed to furnish the details of outward supplies in GSTR 1 if he has not furnished the return in 3B for preceding month. So only 1 tax period. Earlier it was 2 months. And in case of rule 86B, it was 1 month. Now whether it is 86B is applicable, not applicable, doesn't matter. Regular person, preceding 1 month 3B not filed, current month GSTR 1 cannot be filed. If a registered person required to furnish return for every quarter under the proviso 239 subsection 1, the QRMP scheme, shall not be allowed to furnish the details of outward supplies in GSTR 1 or through IFF if he has not furnished the return in 3B for preceding tax period, which means preceding 1 quarter. Here there is no change, the change is over here. So friends, if a person is there under regular scheme, if he has not filed 3B for March, GSTR 1 for April, he would not be in a position to file it. If he is under QRMP scheme, not filed for the quarter Jan to March, if he has not filed GSTR 3B for the quarter Jan to March, he would not be in a position to file his IFF for the month of April. The next change in exemptions. Now friends, just to recollect, first, what was there prior to change? Now friends, transportation of passengers in stage carriage, if it is non-AC, it was exempted. Contract carriage, if it was metered cabs or auto rickshaws, it was exempted. If it was other than meter cabs or auto rickshaws, other than radio taxis, in those cases, and if it was non-air conditioning, and that too if it should be not for tourism, not for conducted tour, not for charter or hire, then it was exempted. Now friends, there is a change in these 3 exemptions which are there. There is a change in these 3 exemptions. Now what is the change? Now friends, as we know, passenger transportation services could also be provided through an electronic commerce operator. And if these passenger transportation services are provided through an electronic commerce operator, the ECO has to pay taxes under 9 subsection 5. So friends, the change is, if these 3 services which were earlier exempted, which means stage carriage, non-AC, metered cabs or auto rickshaws in case of contract carriage, in case of contract carriage, the residual category, which means other than metered cabs or auto rickshaws, other than radio taxi, the residual category, if it was not for tourism, not for conducted tour, not for charter or hire, and if it was non-AC, it was exempted. Now friends, here there is a slight change. The change is, if it is provided through an ECO, it is taxable, otherwise it is exempted. These 3 services, if it is provided through an ECO, it is taxable, otherwise it is exempted. So friends, if it is through an ECO, it is taxable. Who is going to pay taxes? The taxes are supposed to be paid by the ECO under 9 subsection 5. The next change in exemptions, friends, any services which is provided to the government, pure services where goods component is not involved, or those services where goods component is involved but which is not exceeding 25% of the total value of contract. If these services were provided to the government, local authority, governmental authority, government entity were exempted. Now friends, the scope of these exemption has been narrowed down. Narrowed down in sense, pure services if they are provided to government or local authority are exempted. Pure services, which services? Those services which are provided to government or local authority by way of any activity in relation to any function which is entrusted to a panchayat or a municipality under Article 243G or 243W of the Constitution. Those services, if it was given to a government, local authority, governmental authority or government entity, was exempted. However, this exemption has now been trimmed down, the scope has been narrowed down. Governmental authority and government entity is removed, which means that pure services of this kind, if they are given to a governmental authority or a government entity, would be taxable. Now friends, if it is not a pure services, if it is a composite supply of goods and services wherein the value of the goods is not more than 25%, of course by way of any activity in relation to a function entrusted to a panchayat or a municipality under 243G or W of the Constitution, these services also, if it is given to a governmental authority or a government entity, earlier it was exempted, now is not exempted. So friends, the scope has been narrowed down. Services provided to government authority and entity, these type of services which were earlier exempted, now they are going to be taxable. Friends, the next change is in e-waybill. Now friends, wherever a registered person is causing movement of goods for a consignment value exceeding 50,000 rupees, he is supposed to generate an e-waybill and the goods are to move only with this e-waybill. Wherever e-waybill is required and an e-waybill is not being generated, it is called as an invalid movement of goods or it is a movement of goods in contravention to the provisions of the act or the rules. Parallelly, the proper officer has got powers to intercept the vehicle, to inspect the documents, to check the documents, to inspect the goods. He has got the powers to detain the vehicle and the goods, which means detain means to stop further movement of the goods and the vehicle, to seize the goods and the vehicle, which means that he has got the power to take possession of, take control of the goods and the vehicle wherever he finds that the e-waybill is not there or the movement is in contravention to the provisions of the act or the rules. Then he would release the goods and the vehicle only after an amount is paid under section 129. Now what was the amount which was to be paid under section 129 to get the goods and the vehicle released? The amount was 100% of the tax and a penalty equivalent to the 100% of tax. Let's suppose the consignment, the goods value, the value of the goods was 1 lakh. GST thereon was 18,000 and it is without an e-waybill. How much you need to pay to get the goods released, to get the conveyance released? Under section 129 you had to pay a tax amount of 18,000 rupees and a penalty of 18,000 rupees, totaling 36,000 rupees you are supposed to pay, and only then the goods and the conveyance would be released. Now friends, there arose a confusion. The confusion was something like this. Section 129 told you that you pay the tax payable on such goods and you also pay a penalty equivalent to the tax payable. Agreed, 1 lakh is the value, 18,000 tax, 18,000 penalty, 36,000 I pay, I get my goods released. Fine. Let's suppose the date is somewhere around 17th July. 17th July 2022, my vehicle is intercepted, the goods are taken, it is detained, it is seized. After payment of 36,000, it is released. 17th of July. How much did I pay? 18,000 tax, 18,000 penalty. Now the question is, for the month of July when I am going to file my returns, I would be paying tax for this particular invoice. Yes, in GSTR 3 I have to pay tax for this particular invoice. Now the question which arose was, already I had paid the taxes when the proper officer has intercepted my vehicle. I paid 18,000 tax, 18,000 penalty. That tax, can I adjust it over here now? This was the question. So friends, there was a confusion because section 129 unnecessarily used the words tax. It says 100% tax and a penalty equivalent to 100% of tax amount, which means I had paid 36,000, 18,000 was tax, 18,000 was penalty. Now when I am going to file my returns, include this invoice in my return, should I pay 18,000 once again? Friends, if you could connect this again with 17 subsection 5 block credit, any tax which was paid under section 129, credit of that would not be allowed to the recipient. So this entire thing created a confusion. So in order to bring more clarity, they have amended the amount which is payable under section 129. The quantum of the amount remains the same. Only the nomenclature has been changed. Let's have a look. What does it say? It says you will have to pay a penalty which is equivalent to 200% of tax amount. You will have to pay a penalty which is equivalent to 200% of the tax amount. Now what you are going to pay is what? It is called as penalty. How much is the penalty? 200% of the tax amount. So there is no confusion now. Value of goods 1 lakh. Intercepted e-way bill not there. How much? What is the rate of tax? 18%. To get the goods released, what you have to pay? Penalty. How much? 200% of tax. What is tax? 1 lakh is the value, 18%, 18,000 is the tax. Pay 36,000 as penalty, release the goods. 17th July. For the month of July, you will be filing returns in the month of August. 20th August is the due date. You will be filing GSTR 3B. Yes. Should you include this invoice? Which invoice? Invoice was there, e-way bill was not there. You got the goods released after paying 36,000. This invoice, when you are going to report it, are you supposed to pay 18,000 again? The answer is yes, because for the release of goods, what you had paid was only penalty which was equivalent to 200% of tax amount. So there you paid 36,000, penalty, got the goods released. This invoice you will be reporting it in GSTR portal, filing the returns. You have to pay 18,000 rupees as tax. This tax 18,000 what you are paying, can the recipient take credit? The answer is yes. Here this recipient can now take the credit. So friends, I am sure you are able to follow this. So the change which was there is, as far as taxable goods is concerned, if the owner of the goods comes forward for payment, it is penalty equivalent to 200% of tax payable on such goods. If it is exempted goods, there is no change. It is lower of 2% of the value of goods or 25,000, whichever is less. If the owner of the goods doesn't come forward for payment, it is higher of 200% of tax payable on such goods. It is penalty which is higher of 200% of tax payable on such goods or 50% of the value of goods. If it is exempted goods, here there is no change, lower of 5% of the value of goods or rupees 25,000, or he could give a security equivalent to the amount which is payable over here and he can get his goods released. So friends, in simple terms, the quantum does not change. What changes is nomenclature. Earlier it was 100% of tax and a penalty equivalent to 100% of tax. Now it is penalty equivalent to 200% of tax. Entire amount what you are paying is penalty only. Therefore, this particular invoice, when you are going to file your returns, again you will have to pay whatever is the tax amount. Example, value of goods is 2 lakhs. CGST is 18,000, SGST is 18,000, totaling to 2,36,000. If the owner is coming forward, how much it is? It is 200% of the tax amount. So it is going to be CGST, it was 18,000, it would become 36,000, SGST 36,000, totaling 72,000 is the penalty which is supposed to pay, and only then the goods and the conveyance would be released. If the owner doesn't come forward, if the owner is not coming forward, it is going to be 50% of the value of goods or the penalty which was 36,000 CGST. We have to see separately for CGST and separately for SGST. So for CGST, 200% of tax 36,000 or 50% of the value of goods. How much is the value of goods? It is 2 lakhs. 50% of it is 1 lakh. Whichever is higher, here you have to pay 1 lakh. Under SGST again 36,000 or 1 lakh, whichever is higher, again 1 lakh. So total 1 lakh plus 1 lakh, 2 lakhs. So wherever the owner does not come forward, the goods and the conveyance would be released only when 2 lakh rupees is being paid, which becomes your 100% of the value of goods. Why 100% of the value of goods? The provision says 50% of the value of goods. But friends, please remember, CGST Act, this is the provision. Parallel, you have the same provision under the SGST Act. So both the provisions you'll have to apply. CGST, it is 200% of the tax amount or 50% of the value of goods. Tax amount for CGST is 18,000. It would become 36,000. Value of goods is 2 lakhs. 50% of it would become 1 lakh. Whichever is higher, you get 1 lakh is higher. Similarly, for SGST, you get 1 lakh is higher, totaling 2 lakh rupees you are supposed to pay if the owner doesn't come forward, and only thereafter the goods and the conveyance would be released. Now friends, in case of IGST, so 2 lakhs, IGST is 36,000, 2 lakh 36,000. If the owner comes forward, 200% of tax is the penalty, which is 72,000. If the owner doesn't come forward, it is going to be 72,000 rupees, which is the penalty amount, or friends, please understand, 50% of the value of goods was under CGST and 50% of the value of the goods was under SGST. So when it comes to IGST, it would become 100% of the value of goods. So here the value of goods is 2 lakhs, so 100% of it would become 2 lakhs. So in case if the owner does not come forward, he will have to pay 2 lakh rupees, and only then the goods and the conveyance would be released. Now friends, what if it is exempted? Value of goods is 2 lakhs, tax is nil, totaling to 2 lakhs. If the owner comes forward, it is 2% of 25,000, whichever is lower. So it is 4,000. If the owner doesn't come forward, 5% or 25,000, whichever is lower, it is 10,000 rupees. Now friends, what is the procedure? Whenever there is an improper transportation of the goods, let's assume without an e-way bill, invoice is that, but the e-way bill is not there, goods and the conveyance would be detained and seized by passing an order. Goods and conveyance would be detained, which means the movement would be stopped, seized, which means the possession would be taken. The control of these goods and conveyances would be taken by the proper officer. So the goods and the conveyances were detained and seized by passing an order. Now this detention or seizure order is passed. Now a notice would be issued within 7 days of the seizure, specifying the penalty to be paid. Now the taxpayer would either reply or he would not take any action. In next 7 days of the service of notice, an order specifying the penalty to be paid would be issued. If the taxpayer pays it, all the proceedings are concluded, the goods could be released, the conveyance could be released. If the taxpayer doesn't pay it, but within how many days? Friends, please understand, here seizure is happening. After seizure is happening, within 7 days notice is given. After notice is served, within 7 days order is given. Now order comes. If the applicant, if the registered person pays, proceedings are completed. If he doesn't pay, then whatever is the goods or the vehicle which is being seized, it would be disposed of, and the proceedings, the sale proceeds would be used for payment of this penalty. But how long after the order is given, how long is the government going to wait? They say if the taxpayer doesn't pay within 15 days from the date of receipt of order, then the goods and the conveyance seized are liable to be sold or disposed of otherwise to recover the penalty. However, the conveyance can be released on payment of lower of the penalty amount or rupees 1 lakh. So friends, as regards as disposal is concerned, if the taxpayer is not paying within 15 days from the date of receipt of order, the goods and the conveyance would be sold or disposed of, and the sale proceeds would be used for discharging this liability under section 129. However, the person in charge of the conveyance can get the conveyance released by payment of a penalty which is lower, by payment of an amount which is lower of the actual penalty under section 129 or rupees 1 lakh. But friends, please understand, this is only for the conveyance. Now this period of 15 days in case of perishable goods, hazardous goods, or if the goods are likely to depreciate in value because of passage of time, this period of 15 days could be further reduced. Now friends, in case if the taxpayer is not paying the penalty under section 129, the goods would be disposed of, and the conveyance, an option is given to the person in charge of a conveyance to pay either lower of the penalty rupees 1 lakh and get the conveyance released. However, if he also doesn't make such payment, then the goods and the conveyance would be disposed of. What would be the manner of appropriation of those sale proceeds? The manner of appropriation of those sale proceeds is going to be administrative cost for recovery. So whatever the sale which has happened, the auction expenses, the sale which has happened, whatever is the administrative cost, that would be adjusted first, then against the penalty. Then if there is any other amount due under that with respect to this particular person, that also will be wiped off by the sale proceeds. And after that, if there is any balance which is remaining, if the person is a registered person, it will go to his cash ledger. If the person is an unregistered person, it will go into his bank account. If it is not possible either to give it in the cash ledger or to give it in the bank account, maybe the person itself is no longer there, then it would go to the Consumer Welfare Fund. So now friends, let's suppose the value of goods was 2 lakhs. The same example will continue. CGST 18,000, SGST 18,000, totaling to 2 lakh and 36,000. If the owner is coming forward, they have to pay 200% of tax as penalty. So CGST penalty 36,000, SGST penalty 36,000, total penalty 72,000. If the owner doesn't come forward, it is going to be the penalty or 50% of the value of goods. So penalty is 36,000. That is 200% of tax amount or 50% of the value of goods, which is 1 lakh. Similarly, 36,000 or 1 lakh, here it becomes 2 lakhs. Now, assuming this person, the owner doesn't come forward, he is also not paying this penalty. The goods and the conveyance are liable to be sold off. However, now, just because this owner of these goods did not generate an e-way bill, even the conveyance, please understand, even the vehicle is being intercepted. Even the vehicle's movement is not allowed. Now, if this amount is not paid, both goods and vehicle will be sold off. Now, just because of one person not generating an e-way bill, the person in charge of the conveyance, the transporter, is in trouble. So, therefore, for him an option is given. You either pay the penalty or lower of or 1 lakh rupees, whichever is lower, and you get the conveyance released. So, in this case, the penalty is 2 lakhs. So, therefore, if the conveyance is also detained, which means this person has not paid this penalty under section 129, goods and conveyance is seized, it is detained, it would be released only on payment of a penalty. Now, here this particular transporter, he has got an option to pay 1 lakh rupees and get his conveyance released. A related amendment under section 130. Now friends, section 129 prior to amendment, if the amount was not paid under section 129, then what would happen? The goods were liable to be confiscated under section 130. So friends, whenever an amount was not paid under 129, the linkage was given to section 130, which means the goods were liable to be confiscated under section 130. Confiscation means the ownership transfers to the government. But now friends, post amendment 129 and 130 are independent sections. Under section 129, if you are not paying the amount, you need not travel to section 130. Under section 129 itself, the goods and the conveyance can be disposed of. You need not travel to section 130. But prior to amendment, if under section 129 the amount is not paid, the goods were liable to be confiscated under section 130, and you had to pay an amount under section 130, or the goods or the conveyances would be disposed of. So now friends, under section 130 also linkage was given to section 129. Section 129 was linked to 130, 130 was linked to 129. Now what we have done, we have finished seeing section 129. Under section 129 currently there is no linkage. After amendment there is no linkage to section 130. Amount of 129 not paid, under section 129 itself the goods and the vehicle can be disposed of. Coming to section 130, there was a linkage to section 129. Now that linkage is no longer required. That linkage has been removed. To that extent, section 130 has been amended. Let's have a look. So wherever the goods which are liable to be confiscated or the conveyance which is liable to be confiscated, we are looking into section 130. What is meant by goods liable for confiscation? You supply or you receive or you store goods in contravention to the provisions of the Act. You are using a conveyance for transportation of goods which are liable to be confiscated. So in those cases, the goods and the conveyance is liable to be confiscated. Confiscation means ownership transfers to the government. Now what would be the government doing with these goods and these conveyances? Does it have so much of space to store them? The answer is obviously no. The government would dispose them off. Now again under section 130, the government gives an opportunity. See, before I dispose of, I give you one last chance. Pay a fine called as redemption fine. Take your goods, take the conveyance and go back. If not, I will sell these goods and conveyance, and the sale proceeds I would be appropriating it. So now friends, what is that redemption fine? The redemption fine is where confiscation of any goods or conveyance is authorized by this Act, then the owner of the goods, now we are talking about goods first, then we will be talking about conveyance. The owner of the goods will be given an option to pay a fine in lieu of confiscation, and such fine shall be as the officer thinks fit. which means it is a discretionary power. However, minimum and maximum range is given. Such fine leviable shall not exceed the market value of the goods confiscated less the tax chargeable thereon, and the aggregate of such fine and the penalty leviable shall not be less than an amount equivalent to 100% and penalty equivalent to 100% of tax payable on such goods. So friends, here earlier the linkage was given to section 129. However, the amount payable shall not be less than the amount payable under section 129. The minimum range which we are talking about, the minimum amount, it was linked to section 129. Now it is not linked to section 129. It simply tells you aggregate of such a fine and penalty leviable shall not be less than a penalty equivalent to 100% of tax payable. So this is the change which is there. I repeat again friends, the goods which are liable to be confiscated, the owner of the goods would be given an option to pay a redemption fine. Redemption fine, how much? As much the amount the officer thinks fit. Is there any minimum and maximum range given? Yes. What is the minimum range? 100% of tax amount is a penalty. What is the maximum range? Market value of the goods less the tax chargeable thereon. Of course, because if you are going to ask for a redemption fine which is greater than the market value of the goods, who is going to pay? So therefore, that is the maximum range which is given. What about the conveyance? The owner of the conveyance shall be given an option to pay in lieu of confiscation a fine which is equivalent to the tax payable on such goods. So friends, this is confiscation under section 130. Now in case to what time is given for the owner of the goods and conveyance to pay this redemption fine, the time which is given is maximum time of 3 months. If within a period of 3 months this redemption fine is not paid, the goods and the conveyance would be disposed of and the sale proceeds would remain with the government. The next few amendments in the area of refund. Now friends, as regards as deemed exports is concerned, we are aware that in case of deemed export, either the supplier can claim the refund or the recipient can claim the refund. Now friends, there is a relevant date for all sorts of refund application. There is a time limit within which a refund needs to be applied. The question is, now as far as relevant date for deemed export is concerned, it says the date on which the return relating to such deemed exports is furnished. It says the date on which the return relating to such deemed exports is furnished. Now friends, the question is, it is talking about whose return? Is it talking about the supplier's return or it is talking about the recipient's return? Let's suppose if I am making a deemed export supplies to you, I am the supplier, you are the recipient. If I am opting to make an application for refund, either the supplier can choose to make a refund or the recipient can choose to make a refund. If supplier is opting for going for the refund route, should the supplier's return date to be taken? Let's say if the recipient is opting to go for the refund route, should the date of the return of the recipient to be considered for computing the relevant date? So the question is, it is talking about date on which the return relating to such deemed exports is furnished. It is talking about whose return? Is it the supplier's return or is it the recipient's return? Now friends, here the circular has clarified. Circular number 166/22/2021. Of course, you need not remember it. It states, since it is a deemed export supply which is being made, so this particular return is going to be of the supplier. Deemed export supply is being made by the supplier, so therefore it is going to be the return of the supplier. Even if the supplier is going for a refund or even if the recipient is going to claim a refund out of it, relevant date would be computed from the date on which the return by the supplier relating to such deemed export is being furnished. So friends, in simple terms, whoever is going for the refund, either the supplier or the recipient, the relevant date would start from the date on which the return by the supplier relating to such deemed export is furnished. UIN refund. Friends, under section 55, certain notified persons are eligible to take a refund of tax paid on inward supplies. Now friends, few of the notified persons are allotted a unique identification number. They are registered under GST, but they are not called as registered persons. They are having a unique identification number. They do not have a GSTIN number. Now friends, if these persons want to claim a refund of tax paid on their inward supplies, they want to claim a tax paid on their inward supplies, then in such a case, the UIN of the applicant should be mentioned on the tax invoice, which means I am a notified person, I am having a UIN number, I receive my inward supplies after payment of taxes. The taxes which I have paid on my inward supplies, I have to go and claim for a refund of it. In such a case, on that particular tax invoice, my UIN number should be mentioned. Now friends, it is highly possible that since UIN is not so common, there are chances that mentioning UIN number on the tax invoice might have been missed. So in such a cases where proviso comes to help, this proviso has been amended. Rule number 95 has been amended. It says, provided that where the UIN of the applicant is not mentioned in the tax invoice, the refund of the tax paid by the applicant on such invoice shall be available only if the copy of the invoice duly attested by the authorized representative is submitted along with the refund application. So friends, in such a case, here the copy of the invoice also needs to be furnished. Cash ledger refunds. Now friends, as we all know, if the refund amount, for claim of any refund amount, you have to satisfy the doctrine of unjust enrichment. So friends, if the refund amount which you are claiming exceeds 2 lakh rupees, in such a case, a chartered accountant or a cost accountant has to certify that the incidence of taxes has not been passed. If it is below 2 lakh rupees, a self-certification needs to be given. Now the question is, friends, wherever a refund is claimed from a balance which is lying in the cash ledger, do you still require such certification? Either self-certification or a certification by a CA or a cost accountant, is it still required? The answer is no, because friends, claiming a refund from cash ledger is as good as you're claiming a refund from your own bank account. So in such a case, incidence of taxes being passed is not required to be established. CA certificate or the self-declaration is not required. The second one, whenever you're claiming a refund from your cash ledger balance, is this time limit of 2 years applicable? The answer is no. The relevant date, the time limit of 2 years within which a refund application has to be made, is not applicable for application of refund from your cash ledger balance. Slightly twist the question. Let's suppose I am a supplier, you're a recipient who is notified under section 52 to deduct TDS. You deduct TDS, the amount comes to my cash ledger. Now the TDS which you have deducted is lying in my cash ledger. Now the surplus balance which is available in my cash ledger, which I want to claim a refund out of it. Now when I am claiming a refund from the cash ledger, which is nothing but the TDS which is deducted by you, in such a case, will this time limit of 2 years apply? The answer is again no. It is again no, because once it has gone into my cash ledger, now the refund which I am claiming is a refund from my cash ledger. It is not a refund of TDS what I am claiming. Once it has come into my cash ledger, the refund which I am claiming, it is a refund of the balance which is lying in my cash ledger. The time limit of 2 years would not apply. I need not also prove whether the incidence of taxes have been passed. I need not give a self-declaration. Neither am I required to give a CA certificate or a cost accountant certificate where the amount exceeds 2 lakh rupees. Aadhaar authentication and refund application. Friends, this we have already seen in the beginning itself. Aadhaar authentication is mandatory for the activities which are listed in 10B. So those activities are in case of a revocation of cancellation of registration, where a refund application is filed RFT 01 under Rule 89, or in a case where IGST has been paid on export of goods. Even in such a case, if refund is required, Aadhaar authentication is mandatory. And however, if Aadhaar authentication, if Aadhaar number is not available, you have to first go and apply for an Aadhaar number. That enrollment number along with other documents you need to upload it. Once you get the Aadhaar number, then within the 30 days you will have to authenticate that Aadhaar. The next amendment in the area of demand and recovery. Now friends, we would often find in section 73 and section 74 the wordings called as all proceedings are deemed to be completed. Now friends, just a brief background of it. Under section 73, the normal penalty is 10% of the tax amount or rupees 10,000, whichever is higher. Under section 74, the penalty is 100% of tax amount. However, the government offers various incentives at various stages if you want to close the matter. Under section 73, show cause notice plus 30 days. Show cause notice issued plus 30 days if you are paying the taxes along with interest, penalty is totally waived off. Similarly, under section 74, before issuance of show cause notice, after issuance of show cause notice, after issuance of an order, various discounts and penalties are offered. If you pay it, the matter ends there, And not only the matter, all proceedings are deemed to be concluded. Now, what is meant by all proceedings are deemed to be concluded? Parallel proceedings could have been initiated not only against the registered persons but also of the persons who are actually in charge of the affairs. Now, say for example, proceedings are initiated against a company. Let's suppose for taxes not paid. Now, similarly, even against the director of a company, some proceedings can be initiated because he was the person who was mastermind. He was the person who was actually who was managing the affairs of the company and who was not paying the taxes. Proceedings can be initiated against him as well. Now, let's suppose under section 74, prior to show cause notice, if the company is paying the taxes along with 15% penalty and it is closing of the issue, whether the proceedings which were initiated against the director also stands concluded. So, what is meant by all proceedings deemed to be concluded? So, friends, here we go. The expression all proceedings in respect of the said notice shall not include proceedings under section 132, which means your criminal proceedings will not be deemed to be concluded. Now, where the notice under the same proceedings is issued to the main person liable to pay tax and some other persons also, and such proceedings against the main person have been concluded. The examples which we have seen: proceedings initiated against the company, proceedings also initiated against the director. Company is a registered person. Company pays off the tax plus interest plus penalty at 15% prior to issuance of show cause notice. In such a case, the proceedings against company are concluded agreed. But what about the proceedings against the director? So now please read it in that context, where the notice under the same proceedings is issued to the main person liable to pay tax and some other person also, and such proceedings against the main person have been concluded under 73 or 74. The proceedings against all the persons liable to pay penalty under section 122 or section 125 earlier, prior to amendment, it was 129 and 130 are deemed to be concluded. Now, what is the change? The change is the reference to 129 and 130 has been removed. Now, friends, please understand what is this removal for. This section 129 and section 130 was actually unnecessary over here. Friends, 129 and 130. Under section 129, what was section 129? Wherever the goods are transported in contravention to the provisions of the Act, the proper officer can intercept the vehicle and then he would be releasing the vehicle and the goods only after an amount is being paid under section 129. Those proceedings under 129 and 130, even otherwise when independent, it had got nothing to do with section 73 and section 74 proceedings. So therefore, this was actually not required at all. It did not make any sense of having section 129 and section 130 over here. So therefore, the reference to section 129 and section 130 has been removed. Next concept in demand and recovery, self-assessed tax not paid. Now friends, if I have assessed my taxes but I have not paid those taxes, which means that I have filed an invalid return. Scenario number 1, self-assessed taxes not paid, which means that I have assessed the taxes, I have reported these taxes to the government, but I have not paid. In such a case, what is the consequence? Now friends, the consequence is when the self-assessed taxes are not paid, show cause notice is not required. Show cause notice is not required at all. Why show cause notice is not required? Friends, in show cause notice, what would be questioned? Come show cause why, the proper officer would say, come show cause why I should not collect so much of tax from you. The person would say, I myself am saying I am supposed to pay so much of tax. Then why are you asking me the same question again? When I myself am voluntarily telling you that I have to pay so much of taxes, I have self-assessed my taxes and offered this information to you, then why are you questioning me again? Come show cause why this taxes should not be collected from you. Are you mad? So friends, for self-assessed taxes which are reported but which is not paid, there is no requirement to issue a show cause notice, which means that friends, the general order which we know, show cause notice, then you have an order. After an order is received, either pay the amount or go for an appeal. If you neither pay nor you go for an appeal but you just relax, then the amount would be recovered. The recovery sale would cover. He would They would attach your properties, movable and immovable, and recover the amount from it. Now friends, in case of recovery in case where the government wants to collect the self-assessed taxes which are not paid, show cause is not required, order is not required, it can directly go to recovery. This is point number 1. Point number 2, section 73, the penalty is 10% of tax or 10,000 whichever is higher. However, if at all within show cause notice plus 30 days, within show cause notice plus 30 days, if the amount is being paid, entire tax amount plus interest, penalty is totally waived off. This relaxation of paying the amount within 30 days of show cause notice and getting a waiver of full penalty is not available in case of self-assessed taxes which is not paid within a period of 30 days from its due date. What is the reason? Friends, the reason is very logical. Show cause notice plus 30 days if you are paying, this benefit is available. In case of self-assessed tax not paid, show cause notice itself is not required. When show cause notice itself is not required, where is the question of reduced penalty benefit being available? So friends, in sum and substance, only two things as regards self-assessed taxes is concerned in the demand and recovery chapter. Point number 1, self-assessed tax not paid, direct recovery, no show cause, no order. Point number 2, self-assessed tax not paid within a period of 30 days from the due date. You have to pay tax, you will have to pay interest, you will have to pay penalty also. What is the penalty? 10% of tax amount or 10,000 rupees, whichever is higher. Any waiver is available for this penalty? The answer is no, because waiver was available only when show cause notice plus 30 days if it was paid. Now, there is no question of show cause notice being issued itself. So, where is the question of penalty being waived off? I repeat again, self-assessed tax not paid, only two things. We have not yet come to the amendment. We are only discussing the background. Show cause notice, self-assessed tax not paid, only two things. 1, no show cause notice is required, direct recovery. Point number 2, the benefit of reduced penalty would not be available, which means self-assessed tax not paid within a period of 30 days from due date. Within a period of 30 days from the due date, you will have to pay tax, you will have to pay interest, you will have to pay penalty at the rate of 10% of tax amount or rupees 10,000, whichever is higher. Now friends, the question comes, what is meant by self-assessed taxes? What is meant by self-assessed taxes? Two things. Point number 1, self-assessed taxes not paid, which means that I file my return but I do not pay the taxes. I file my GSTR 3B return but I do not pay the taxes, which means I file an invalid return. Possible? Theoretically possible. Invalid return has been defined under GST law. Return filed, tax not paid. Return filed, GSTR 3B filed, tax not paid, defined in GST law. Practically not possible. Portal does not allow you to file a return without payment of taxes. So theoretically, invalid return can be filed, that can be regarded as self-assessed taxes not paid. Point number 2, turnover declared in GSTR 1 but not declared in GSTR 3B. Turnover declared in GSTR 1 but not declared in GSTR 3B. This would be regarded as self-assessed tax not paid by virtue of an explanation which is inserted in section 75 subsection 12. So whatever is a shortfall in the turnover between GSTR 1 and GSTR 3B, in 1 you declared a turnover of 1 crore, taxes 18 lakhs. In GSTR 3B, you only declared a turnover of, let's say, 50 lakhs, taxes 9 lakhs. To the extent of 9 lakh, it is self-assessed tax which is not paid. What would happen? It would go to direct recovery. So let's have a look at the explanation. For the purpose of this subsection, the expression self-assessed tax, this is the new amendment which is coming, shall include the tax payable in respect of details of outward supplies which is furnished under section 37, GSTR 1 or IFF, but it is not included in the return which is furnished under section 39. So friends, self-assessed taxes not paid, it could be two scenarios, one theoretical, one practical. Theoretical is invalid return being filed, law allows, portal doesn't allow. Practical, which law is also allowing, portal is also allowing. Practical, it is GSTR 1 which is being filed or IFF which is being filed. The tax which is declared in 1 or in IFF is more, and the tax which is actually paid in GSTR 3B is on a lesser side. In such a case, it would be regarded as self-assessed taxes not paid and no show cause notice is required. The action would go direct to recovery. Next is provisional attachment. Now friends, please understand, What is the sequence? The general sequence is a show cause notice would be issued, principles of natural justice, reply to the show cause notice to be given, opportunity of being heard to be given, then the officer would give an order. Show cause notice does not create any liability, it is the order which actually creates a liability. So order creates the liability. Against the order, either the assessee, the registered person can pay, close the issue, or he can file an appeal. If he is agitated, file an appeal, the proceedings would go to the court, or if it is doing nothing, the recovery cell would come and it would attach the movable and immovable property. So friends, for the recovery action to be initiated, you have to cross all these stages. Show cause notice has to be issued, the matter has to be adjudicated, personal hearing to be given, order to be issued. After order being issued, you have to wait at least for 3 months, because the person has got a period of 3 months to go and file an appeal. Only order is being issued, only after a period of 3 months, if no appeal is being filed, properties can be attached. So all these stages needs to be passed. However friends, passing all these stages would require considerable amount of time, and the government may fear that if so much of time is given, the person whose properties are to be attached, he might make some other arrangements. He would transfer this property to someone else, or he would run away from the country. So therefore, in such a cases, there is a concept called as provisional attachment. Proceedings initiated but not completed. Show cause notice is issued, order is not received, still property can be attached. Under which section? There is a section called as section 83, wherein provisional attachment of property is possible. Now there is an amendment to this section, section 83. Prior to amendment, there were only few sections. When the proceedings against a few sections were initiated, provisional attachment was possible. Now the coverage of section 83 has been broadened. If the proceedings are initiated, the broader proceedings which we are now going to discuss, if they are initiated but not completed, and if the proper officer, for the interest of revenue, he can proceed, go ahead and provisionally attach the property. Let's have a look at section 83. It says, where after the initiation of any proceedings under chapter 12, chapter 14 or chapter 15. Now earlier it was not chapter 12, chapter 14, chapter 15. What it was currently it is chapter 12, chapter 14 and chapter 15. Earlier it was only 62, 63, 64, 67, 73 and 74. Only these sections were covered. Under section 83, earlier the wordings were, after the initiation of any proceedings under section 62, 63, 64, 67, 73 and 74. After initiation of these proceedings, if the commissioner is of the opinion and the story goes on, the provisional attachment can be done. Now this coverage has been widened. Now it says, after initiation of proceedings under chapter 12, which is of self-assessment, provisional assessment, scrutiny of returns, best judgment assessment, summary assessment. Chapter 14, your inspection, search, seizure and arrest. Chapter 15, determination of tax not paid or short paid. This entire chapter, after initiation of these proceedings, in such a case, in the interest of the government revenue, if it is necessary so to do, the proper officer may in writing attach provisionally any property including the bank account belonging to whom? Either belonging to the taxable person or the mastermind behind the taxable person who has designed this entire fraudulent thing, or any person specified in subsection 122 subsection 1a. Who is specified in 122 subsection 1a? It is the mastermind. Registered person, the registration would have been taken in some XYZ or someone else's name. He would be in a remote area in a village, but under his GST registration, all these fraudulent activities are being carried out. Against that person also, 122 1a, the mastermind, also provisional attachment can be done. This provisional attachment shall cease to have effect after a period of 1 year from the date of order. Please understand friends, this attachment is only provisional. The matter has to be adjudicated. Show cause notice is issued, provisional attachment can be done. but personal hearing will be going parallelly. Order has to come, and finality of the order after it is being achieved. Thereafter, the assessee would decide either to pay or to go for an appeal or the legal proceedings which are available. However, friends, once after proceedings are initiated, if the property is provisionally attached, after this provisional attachment within a period of 1 year, after the expiry of period of 1 year, this provisional attachment shall cease to have effect. So friends, what is the change? The change is earlier only few sections were covered, now the entire chapters are being covered. So now friends, what is the sequence? The sequence is a copy of the order of provisional attachment. Rule 159 tells you a copy of the order of provisional attachment will be going to the concerned authority. What is the concerned authority? Let's suppose if the bank is to be attached, the bank account is to be attached, it would be going to the banker, and a copy would be going to the person whose property is being attached. Let's suppose if I am the taxable person whose property is being attached, a letter order copy would be going to my bank account, to the bank where my account is being operated, and the second one I would also be receiving a copy of the order. Now, if the property which is attached is perishable or hazardous, then an option would be given. I would be given an option either to pay my dues, whatever is the show cause notice which is being received by me, whatever is the dues which are there, either I have to pay the dues or I have to pay the market value of the said property, whichever is lower. In which cases? Only in those cases where the property which is attached is perishable or hazardous. Let's have a look. If the property attached is perishable or hazardous and the person whose property is attached is ready to pay the lower of sums due or the market value of the property, the said property can be released. If I do not make this payment, then the government can dispose of my property and adjust those dues against this sum which is payable. Any person whose property is being attached, my property is being attached, I can file an objection to the commissioner. The commissioner, after giving me an opportunity of being heard, he may release my property. However, anyways, within a period of 1 year, or after the expiry of period of 1 year, the property has to be released. Or the third alternative is the commissioner may also release the property if he is satisfied that the property is no longer liable to be attached. So friends, this is the sequence. It is very simple. Provisional attachment order goes to the concerned authority, goes to the person whose property is being attached. This particular person may file an objection that why is his property being attached? His property is being attached illegally. Now what happens? The commissioner, after giving an opportunity of being heard, may release the property, or if the commissioner thinks fit that this property is no longer liable to be attached, the commissioner may release the property, or in any case, after the expiry of 1 year, this attachment shall cease to have effect. The next amendment, friends, in the area of appeals. Now friends, as we all know, any appeals to the appellate authority can be made only after payment of a pre-deposit. The pre-deposit is 100% of admitted dues, tax, interest and penalty, plus 10% of disputed tax. However, this 10% of disputed tax has got a ceiling limit. It is 25 crores for CGST and 50 crores for IGST. Keep this in mind. Let's come back to section 129, friends. Now friends, under section 129, let's suppose a case where the proper officer has intercepted the vehicle. The proper officer is of the opinion that for this particular movement of goods, e-way bill is required. However, the registered person says for this particular movement of goods, e-way bill is not required, which means the sum and substance is, according to the proper officer, the movement is in contravention to the provisions of Act. According to the registered person, this is a valid movement. Now friends, the proper officer intercepts the vehicle. He says e-way bill is not there. Now, after the vehicle has been intercepted, a detention order needs to be passed. A detention order is being passed. Within 7 days of detention order, a show cause notice to be issued. The registered person replies to the show cause notice stating that e-way bill is not required, citing the provisions for these reasons, e-way bill is not required. The officer is not convinced. He passes an order. Order specifying the penalty. What is the penalty? 200% of the tax amount is the penalty under section 129. Now order has come. Now friends, please understand, the officer would be relieving the goods and the conveyance only if the amount is being paid or a security to the extent of that amount has been furnished. Now friends, the registered person is not convinced with the view of the officer, but however he wants the goods to be released because he has to give the delivery of the goods to his customer. What are the options available? The options available are he has to pay or he has to give a security. Fine. Now assuming friends he pays it. He got an order, he pays the amount and he releases the goods and goes on. But should the assessee also be given an opportunity to actually check whether his opinion was correct or not? That he was actually not required to generate an e-waybill. It is the proper officer's opinion that e-waybill is required. He is agitated by the officer's order. He is agitated by the order of that particular proper officer. So should this person be allowed to contest against this order? The answer is yes. Which scenario are we talking about? We are talking about the scenario where he has entirely paid the amount and released the goods, but he has released the goods for what reason? Only because he has to give the delivery of the goods to the customer, not because he has agreed to the proper officer. He is agitated by the order, but he has paid for releasing the goods. Should he be given an opportunity to agitate it? The answer is yes. Should he be allowed to file an appeal? Yes, against this order an appeal can be filed. Appeal is filed. If he wins the appeal, whatever amount he has paid for releasing these goods will be refunded to him. Now the question is, for filing an appeal before the appellate authority, pre-deposit to be paid. What is the amount of pre-deposit to be paid? Now friends, here he has paid the entire amount. He has already paid the entire amount and then only released the goods. So since the entire amount is being paid, there is no question of pre-deposit. Whatever was the order amount mentioned in the order, he has paid it. Only then the officer has released the goods. So there is no question of payment of any further pre-deposit. Scenario number 2. He has not paid the amount, but he has given security for that amount. Does the law allow it? The answer is yes. 129(1)(c), or upon furnishing a security equivalent to the amount which is payable. He is given a security, got the goods released. He has given security because he wants to file an appeal. He was very sure. Now should he pay a pre-deposit? Because now he has not paid any amount. He was only given a security. Should he pay a pre-deposit and only then file an appeal before the appellate authority? The answer is yes. Now what is the pre-deposit? 100% of admitted dues. Has he admitted anything? No. 10% of disputed tax. Is there any tax which is there in dispute? The answer is no. What is in dispute? Penalty. So what is the pre-deposit he has to pay? So therefore, there is an amendment in section 107 which says that in case of 129 subsection 3 order, if you are given a security and you want to file an appeal, your pre-deposit is going to be 25% of the penalty amount. What was the penalty? It was 200% of tax. So 200% of tax multiplied by 25%, that would become your pre-deposit. That would become your pre-deposit. So essentially, you are paying 50% of the tax amount. Essentially, see, 1 lakh rupees was the value, 18,000 is the tax. 200% of tax is how much? 36,000. So 36,000 multiplied by 25%, 9,000 rupees. So essentially, it is how much? 50% of the tax amount is what you are paying it as pre-deposit. So all that you need to remember is how much pre-deposit to be paid? 25% of penalty amount. How much was penalty? 200% of tax. Which case? If you had given a security. If you had already paid, you have already paid the entire value. No need of again pre-deposit. Now friends, this is appeals to the appellate authority. Now if you could recollect, for appeals to the appellate tribunal, was there a pre-deposit? The answer is yes. 100% of admitted dues, and it was 20% additional of the disputed tax. Now this is the general scenario. What happens in case of e-waybill scenario? E-waybill scenario, if you are already paid the full amount and got the vehicle released, appellate authority you lost, you go to the appellate tribunal. No further pre-deposit required because the entire amount is already paid by you. However, if you had given a security, at appellate authority you pay how much? 25% of the penalty. At appellate tribunal, no additional pre-deposit is required for e-waybill 129 subsection 3 case. Why? Because you have already paid 50% of tax amount as pre-deposit at the first level itself. You had paid 25% of penalty amount. How much is penalty? 100%, 200% of tax amount. So friends, therefore, you had already paid substantial amount at the first level itself. So at the appellate tribunal stage, in case if you are going for an appeal against the order under 129 subsection 3, no additional pre-deposit is required. So friends, in simple terms, what is the conclusion? The conclusion is 129 subsection 3 order. You paid the full amount, got the goods released. Appellate authority stage, no pre-deposit. Appellate tribunal stage, no pre-deposit. 129 subsection 3 order. You gave a security, got the goods released. Appellate authority stage, 25% of penalty amount is the pre-deposit. How much is the penalty? 200% of tax. Effectively, how much is the pre-deposit? 50% of tax amount. At the appellate tribunal stage, no additional pre-deposit is required. Few miscellaneous amendments to end the amendment discussion. Rule 137. The tenure of anti-profiteering authority has been extended from 4 years to 5 years. Anti-profiteering authority was established on 1st of December 2017. So now it was to end at the end of 4 years. Now it has been extended by another year. So this tenure of anti-profiteering authority would end by 30th of November 2022. Next one, section 151 has been amended to empower the commissioner to call for any information. Earlier section 151 was only for power to collect statistics. The commissioner may, if he considers it necessary, by notification direct that statistics may be collected relating to any matter dealt with by or in connection with the act. So friends, here the power which was there only to collect statistics, now the scope of section 151 has widened. The scope of 151 is the commissioner or an officer authorized by him may by an order, notification is not required, by an order, direct any person to furnish information relating to any matter dealt with in connection with this act within such time, in such form and in such manner as may be specified therein. So friends, now the commissioner or an authorized officer by him may just by a letter to any person, he may say, bring your financial records for past 3 years. Earlier, such type of information calling was not possible because earlier section 151 was only for power to collect statistics. Now it says by an order direct any person to furnish any information which is connected with any of the proceedings. So friends, therefore under section 151 huge wide powers are given. Friends, please understand, earlier the proper officers did have the power to give a show cause notice, did have the power to scrutinize the returns, but the power to call for any information just by merely giving a letter was not there. Now under section 151, this power has been given to call for any information which is connected with any of the proceedings under the act. So friends, we have come to an end of this discussion. Very few amendments were there. I hope you had enjoyed it. If you had any queries or any suggestions, you can please write to me over here. I wish you all the very best for your examinations.
Subscribe to LearnCab and hit the bell icon to get notified.